Welcome back from that short break. We have heard a lot of good things about the regulator to help us really move forward as the clients. But now in this last episode, last segment, we want to talk about what has changed or what has improved in the regulation of the insurance players for the past, so far, what has happened so far? We want to hear that from Ivan, and maybe later on he'll also talk about what is the relationship, how is the relationship of the regulator and the insurance players by this time.
Thank you very much, Emmanuel. Indeed, we've had a number of changes around the regulatory landscape of the insurance sector. I'll talk about the first being around 2014. We looked at the composites, because you find that at the time we had companies doing both non-life and life business. And you find that the risks are heterogeneous, they are not the same. So you find that these had to be better managed. So we pushed for the merger of composite companies. And that in a way has promoted the growth of the life insurance sector. Because when you look at the past, the life insurance sector had not been, there wasn't a lot of focus around life insurance. But now with the demerger, you find that a lot of focus has been placed in life insurance, and there's more, actually it's growing at a faster rate in terms of growth rates compared to the other sectors. So you find that the demerger has really improved a lot on that. Then about 2018, we had, when we brought the bank assurance regulations. That was also a key change around the regulatory landscape. In the past, we didn't have any banks doing insurance, but now with the wide branch network of the banks, the industry is benefiting from the uptake of insurance through the bank distribution channels. And we are looking at over 100 billion shillings generated through the banking channel. So that's also a key milestone. Then also still under the regulatory landscape, we look at the what we call the national reinsurance company, the first of its kind, Uganda Re. In the past, reinsurance protection, because when you have these companies, as they take on risks, some of the risks are of very high exposure. So they also need to, what we call, get reinsurance support as they take on some of these risks. They share some of these risks. So there was a lot of externalization of capital in the past, and most of the protection was gotten outside the country. But with the changes, the regulatory changes, we're able to have a national reinsurance company, which is Uganda Re, and is operating very well. That was also a key milestone around the regulatory changes. Then we did an overhaul still of the Insurance Act in 2017. And from that, we've had a number of regulations that have come into place. One is around what we call the capital adequacy and prudential regulations. There's been a change around how do we determine capital. In the past, we had absolute numbers that were required for each company, and there was no risk assessment and risk focus. But now with these capital adequacy regulations, you find that the capital is driven by the level of risk that is assumed by an insurance company. And therefore, if a company takes on high exposure risks, then they also require higher capital. And that then provides much more protection for the policyholders, because as a regulator we require that since you've taken on more risks, then the capital position should also be higher, and that brings in stronger entities. We've also had reforms around corporate governance. We have now a regulation that covers a number of aspects around corporate governance of the insurance sector. So that has also been a key area in terms of regulation. There are also other aspects that we are working on, but I'll also talk about the Insurance Training College, which is a public entity where someone can go and do trainings from insurance. In the past, if you wanted any training on insurance, you had to go to different countries to get these certifications. But now we are glad that with the regulatory reforms, we're able to have a training college for the sector. And anyone can go. They've had a diploma courses and certificate courses in insurance where somebody can enroll and study more about insurance like any other profession. So those are some of the key milestones around regulation. So we are looking at this, the Complaints Bureau. We are saying that you can now bring in your complaints as members of the public. We are looking at issues of different regulations, the motor third party that we are looking at overhauling. That's also another key area that we want to ensure that we enhance the limits on motor third party, because the limits were set in 1989. They are outdated. Maybe it's a 1 million limit. That is quite low, and in aggregate it's 10 million. So we are looking at enhancing these limits so that the public is better protected. So these are some of the regulatory changes that have been ongoing during the period. Thank you.
Thank you, Ivan. Now, you have mentioned very complicated terms. You know already insurance is a very complicated subject. You have mentioned composite. Composite meaning they are like, before you would hear companies doing both general insurance, which is the asset insurance, alongside medical insurance, alongside life insurance. But now the regulation requires that, no, those have to be different entities. Maybe we're going to ask just one question. What does it require for a new player, an insurance player, to set up? What is the minimum capital requirement?
Currently, if you want to do non-life insurance business, the minimum capital requirement is 6 billion shillings. And if a company comes in as a life insurance company, they would need 4.5 billion shillings.
Okay.
So those are now some of the new, that's just the minimum capital requirement.
Yes.
But on top of that, you may need to meet what we call the capital adequacy requirements as you continue taking on risks.
Thank you, Ivan. You see, the reason why you're coming to insurance, you're doing what you call risk transfer. So whatever risk that you have, whether it's a building, whether it's a construction business, or whether it is your own business, merchandise, how is it possible that you're transferring that risk of your general turnover to the insurance company at a small cost? The premium that we are charging is usually less than 1% of that whole combined thing. So if all those risks were to happen, where does this insurance company get all this money from? So it is from these regulations. We need to know that the insurance company has partners who have put in capital, and this capital is regulated by IRA alongside Bank of Uganda. So should even an insurance company go out of, I mean, there are some huge risks. You have heard of companies that made a claim worth 12 billion. But if they did not have enough backing, they would have gone out of business. So how is that possible? Is because there are enough reserves. So all the things, the regulator looks at all that to know that you, the client, are protected. Should you get anything as a claim meaning that is a problem, the risk that is actually insured. Because remember, we are looking at the promise. What is the promise of the insurance company that you're being offered in this contract, and how soon is it being delivered? And if there are any challenges, we now know where to report. But also, it will also be an opportunity to hear from the players themselves. So shall we bring them? Just watch the space. So thank you so much, Ivan. As we are concluding on this session, you have talked about now what is in it for the clients, and what to look out for there, knowing that now there's a stable insurance industry. We have to have players and even agents and all distribution channels well trained and locally, because I remember there are times people had to go to India. Then the nearest college we had was in Kenya,
True.
So imagine sitting a paper and you're getting a qualification from Kenya to do business in Uganda, which is totally different in the way they run. So I think there's a lot that has happened. I really appreciate the work you have done. But now we want to hear what is in it for the insurance players. You haven't talked about, we wanted to hear about the relationship with you and the insurance players out there. And what is the outlook of things in the short term? What is the regulator planning for them and to help solve their issues? Because some of them have mentioned, okay, I think we should talk about the challenges in the next session.
Okay. I would say our relationship with the industry is professional. We have a number of engagements that we have. We have a platform, that's the CEO's breakfast meetings, where we exchange ideas and brainstorm on key industry aspects. And some of these engagements are very key in terms of how we work hand in hand with the industry. So I would say our relationship is professional with the industry that we regulate. Yes, and we have platforms in which we engage with the industry from time to time. Yes.
I appreciate that.
And in terms of the industry, we've done a lot in terms of ensuring that there is stability in the sector. We've also done quite a bit around the innovation space. We've come up with guidelines on what we call the sandbox, where innovations can come up, and then somehow there's testing before, in a controlled environment, an innovation can be done and tested before that particular innovation is maybe formally licensed by the industry, by the regulator. So we have that kind of platform through which innovation within the sector can be done. So we've done a lot in terms of promoting innovation and ensuring that we support the industry in terms of generating more business with the awareness campaigns that we do, with the enforcement of the local content, and having all these projects brought on board. So that is it for the players.
Okay, the players.
Yes.
One last one, I think, as we conclude. How do you talked about the mortality tables for life insurance. How is that? Is it still under pilot project, or has it been enforced? And how is it going to affect the underwriting or the way business is transacted in life insurance?
Okay, I'll start with the past and say that the main challenge we've been having in the past is that The pricing of the life products was based on historical experience in different markets. For instance, maybe a mortality table for UK could be used to price a product in Uganda. But that may not reflect the actual experience within the assured lives in Uganda. So you find that there would be high chances that maybe the premium that is derived at the end of the day is not the appropriate premium. And that then impacts on product development as well as uptake. Okay. But now with the life table, it was developed based on historical experience in Uganda, but for assured lives between 2015 and 2019. And that experience really reflects the actual experience of Uganda in terms of mortality experience of the assured lives. So that can be used to appropriately price the products. And therefore, the premium rates would be appropriate based on the experience of Uganda. Okay. And that we see as a key step in terms of promoting product development. Yes.
Okay, so it has already been enforced and
It is
players
already
utilizing those rates?
Yes.
It is something they're going to just start?
No. We already communicated to the industry. They started implementing this table last year in August. It is being used for pricing life insurance products as well as for valuation purposes. My CEO participated in the launch. We had the launch, an official launch of the tables, in which we had a representative from the Ministry of Finance. Okay. So the tables are there and they are being used by the industry players. Thank you very much, our dear viewers. Indeed, insurance is one of the risk transfer mechanisms that you can use. I encourage the public to take up insurance in order to mitigate the various risks that you're exposed to. In case you want to reach us at any point in time, please feel free to visit our website, www.ira.go.ug. You can submit a query, question, etc. We're also available on social media, Twitter, Instagram, Facebook, IRA Uganda. You can also call on us on our toll-free line, 0800 124 124. Please feel free to visit any insurance service provider. And in case of complaints, you can visit us or reach out to us. I thank you and wish you a nice day.
Thank you so much, Ivan, for this vote of confidence and the assurance to the public. You have told us so much. We're just going to digest and internalize more. Maybe for Mutua, once they are hearing mortality tables, hearing so much governance, yes, that is what it takes to manage risk. Risk is informed by numbers of people who have been insured before. So whatever you're seeing, the rates are going to affect depending on the people, how much people have been insuring, especially like in life insurance. Now, for those who are not yet insured, you're just by yourself. You have not transferred any risk elsewhere. Yet, we shall be bringing you testimonials of people who have benefited from insurance. So, I want us to go for we're ending this episode. We're going to bring you another episode with the regulator and a more interesting one. So, till next time, I remain Emmanuel Sani Safali, bring you the Promise Show. See you next time.